Our next guest this evening is Ben Turney, CEO at Kavango Resources and a regular guest on our focusIR webinars. Kavango is a metals exploration and development company working in southern Africa. Specifically, Kavango is developing gold, bulk mining opportunities in Bulawayo, Zimbabwe, and exploring large-scale copper finds in Botswana's Kalahari Copper Belt. Kavango has just raised a further $3.08 million in funding through an accelerated book build supported by major shareholder Purebond, as well as by non-executive director Peter Wynter-Bee and Ben himself. Welcome, Ben. It has been a busy time. When is it not a busy time for you? So why don't you bring us up to speed with progress?
Thanks for having me, Donald. Yes, it's been extremely busy. Is everything all set up correctly?
Yes, we're all good to go. I'm seeing your slides and I'm seeing you and I'm hearing you loud and clear. It's worth saying that you're
Lovely.
Live and direct from Bulawayo in Zimbabwe. Now there's the first.
I am indeed. Let's hope the power holds up. We've had a bit of a dodgy day with it today, so the internet connection should be fine. It seems to be working at the moment. So here is our usual disclaimer. So today's presentation, I know that a number of our shareholders are watching, and I'm going to focus on the progress that we've made over the last 12 months since Purebond first put their major investment into the company, and what exactly our exploration targets are as we're moving forward. Our share price has performed extremely strongly over the last few months, and I think there are a lot of questions about where is the value now in Kavango. So what I'd like to do today is to present exactly what our plan is and hopefully demonstrate exactly what our future might hold for us. Now, we've got one of the great strengths about Kavango is we have an extremely tight shareholder register. We've been very fortunate to recruit the Consagra family's private vehicle, Purebond. They took a 52% stake in our company last year, and as Donald kindly introduced at the start of this presentation, they've recently increased their overall holding now to just under 58% of the company, having underwritten our recent £3 million accelerated book build. Now, as promised last year when we did the deal, we said at the time there would be no further discounted placings and there would be no further warrant issues. So going forward, that is exactly what Kavango's financing strategy is. So we currently have about 1.5 billion shares in issue, which is a bit on the top heavy side. And the number of warrants we currently have outstanding are 280 million. Now, if those warrants do expire, we will simply let them lapse. That is part of our financing strategy as we move forward. One of the questions I often get asked, Donald, is well, what is your plan for delivering shareholder value? Will you pay a dividend, or exactly how will you distribute funds to shareholders? Well, we obviously need to have some tangible success, and I believe that we are on course to delivering that now. But ultimately, our plan will be, assuming we are able, our results in the field meet with our expectations, and we are able to deliver meaningful, transformational amounts of money into our company, our plan will be to look to go through share buyback programs to tighten up our share capital as we transition from an exploration company to a mining vehicle. So the question then is, well, how are we going to deliver this ambitious vision of ours? In Botswana, we have just announced this morning, we've signed the drill contract with Mitchell Drilling for drilling our 5,000-meter diamond drill campaign into the Kalahari Copper Belt in the northwestern portion of Botswana. Now, over the last 18 months, we've done a huge amount of work on this ground. We've also consolidated our land package following the acquisition of the licenses from ENRG Elements last summer. Thanks to the Consagra's financial backing, we were able to conclude that transaction last year, and that gave us a contiguous land package between our Karakubis project in the west and our South Hansi project to the east. As you can now see, we've got the contiguous land package between the two areas, and this now covers what we believe are, or we hope, are two copper mineralizing systems. All of the work that our team has done over the last 18 months has been guided by Dave Catterall, who really is regarded as the Kalahari Copper Belt's leading exploration geologist. Dave was directly responsible for the discovery of Zone 5, the half-dozen deep holes that were drilled into Zone 5 about 10 or so years ago that led to the creation of that amazing mine and mining camp under Khoemacau Mining that's just recently been sold to a Chinese group, MMG, for $1.9 billion. Now, Dave is very excited about our ground because what he's seeing in terms of the mapping that we've done, the analysis that we've done on the ground, the physical data that we've gathered from drilling that was conducted by ENRG, from water boreholes that we've tested, combined with the various geophysics surveys that we've run and satellite imagery that we use, it looks like we have all the ingredients in place for a major discoveries in our Karakubis, what we're now calling our Karakubis Block. And our ultimate target here is to find 100 million tons of copper, similar in style to the sandfire deposits at A4 and T3, just slightly further to the northeast of our ground. We believe we're on the same structural corridor, and we believe we also have, as you can see on the two satellite images to the right of this slide, we believe we've got the same folding formations and structural traps that if copper mineralization did pass through our area in the superheated fluids, the right traps are in place for that copper mineralization to have gathered, we hope, in commercial sized deposits. Now, at the moment, the only thing that we still need to prove is whether copper actually has transited through our ground, and that's exactly what we're now coming up with our final drill targets, and we're looking to commence drilling at the start of June. This is the best work by a long way that Kavango has done in terms of our exploration. Under Dave's leadership, since he's become increasingly involved in the company, he's really transformed our efforts on the ground and upgraded significantly our capabilities, and we're very, very excited to commence this drill program in the next few weeks. Meanwhile, in Zimbabwe, we're now targeting what we believe could be a 10 million ounce gold camp opportunity. This might sound like an enormous target for a company like Kavango, but if you look at the potential, if you are ever able to come and visit our projects and see on the ground what we're actually doing here, the potential in Zimbabwe is just simply enormous. Zimbabwe has 22 Archean greenstone belts across the country. You can see them in green on this map. Now, what's fascinating about these Archean greenstone belts is that they are the same geological setting as the Archean greenstone belts that you see in Western Australia. These are some of the world's oldest rocks that are at surface, and as such, they're highly prospective for metal deposits, in particular gold, because over the 2 to 2.5 billion years that they've been at or near surface, they've experienced a great deal of geological change and a lot of geological processes to transform the rocks, which significantly increases the chance of modern metal deposits. Now, the history of Zimbabwe and Australia almost mirrored each other in terms of development of their gold mining sectors from the late 1800s through to about the early 1980s. At that point, the two countries diverged as Australia went through the bulk mining boom, these open pit discoveries, looking at the historic high-grade mines and combining these into large-scale, lower-grade open pits. That process started to happen in Zimbabwe at around about the same time, but because of issues that the country faced as it was adjusting to life under majority rule and the tail end of the troubles that the country went through at the point of independence, that interrupted the development of this sector. But during all of that time, the geology has remained the same, and there were even some discoveries, a few open pits that were opened up, proving that Zimbabwe, in the same geological setting as you have in Western Australia, it has this potential for extremely large open pit mines. Now, what we're doing in Kavango is we're focusing on one of these 22 Archean greenstone belts. We've picked an underexplored, underinvested area that's quite quiet and quite out of the way. And this is where we have our Hillside and Nara projects. We've already drilled both of these projects. We've announced some very successful intercepts of both high grade and lower grade, quite wide widths, wide zones that we're looking at. And we're looking like we're building at Hillside, 1.2 kilometers long, that's open at strike, 600 meter wide target area that we're now going to go back and test with drilling. At our Nara project, we've just completed, or in the process of completing, our drill campaign there, and we're just sending off our first samples off for assay testing. We've seen some very interesting looking rocks from both visual inspection and XRF, and we're looking forward to the assay results. Now, What's been transformational for our company has been the involvement of Purebond. Since they invested £6 million into the business last May, this has really enabled us to take the handbrake off the company and push forward with the rationalisation of our project portfolio in Botswana, where we've now focused much more on the KCB, but also to recruit some top geological talent to help both lead and augment our exploration efforts on the ground. Dave Catterall, I've already introduced. His presence has been felt throughout the business, and you can see in terms of the overall quality and standard of the work that Kavango is now doing. Dave has really been sort of the key driver behind it. But alongside Dave, we also have Steve Smith. Steve is the former business development manager for Anglo American. He spent 8 years in that role in Tanzania. He's got 6 million ounces of commercial gold discoveries under his belt. He's been highly active in Zimbabwe since 2008, and Steve is the reason that we as a business entered into this jurisdiction last year. We've pursued Steve's vision for these large-scale open-pit mining opportunities, and we believe that there isn't a person alive on this planet who knows as much about the Zimbabwe's greenstone belts as Steve does. The Consagras have agreed, and with the money that they put into the business, the £6 million last year, the £1.5 million they put in 2022, and the nearly £3 million that they've just invested in now, taking their total investment to just over £10 million. That's been meaningful for our company, and our team has really stepped up to this challenge. Where in the past we were much more focused on Botswana, our emphasis has now moved over to our projects in Zimbabwe as well, while still sort of keeping a focus on our efforts in Bots. So really, as a business, it's quite hard to describe just how much progress we've made. We've only been operational in Zimbabwe for 10 months. We entered the country last July, and as you can see on this really quite crowded slide, we have done an enormous amount in that time. We've declared our maiden resource. We now have a 6,000 ounce resource in the tailings dump at the Nara project. We've announced these fantastic results from the first two prospects, our first two holes, the highlights being 7.2 meters at 9.95 grams a ton. That's the one we're most excited about so far, but we also hit some incredibly high grades at our prospect 4, 2.53 meters with over 2.53 meters at just over 29 grams a ton. These results really are fantastic, and with the follow-up work that we've done with IP surveys and the future drilling that we're now planning, we believe that we are on the cusp of making some bona fide discoveries, these open pit mineable opportunities. We've also done a huge amount in terms of establishing ourselves in Zimbabwe, from setting up the company, securing our ZEDA license, setting up our mining subsidiary. As a business in March, we entered into mining, and we've even started production. And across March and April, we've produced 2 kilos of gold already, and we've now upped our production target to 3 kilos a month by the end of this summer. So Kavango really has hit the ground running in Zimbabwe, and I'm really looking forward to where we'll be as a business in a year's time. I think by that point, we will hopefully have made at least 1, if not 2, major discoveries, and we'll be much closer towards mining those opportunities and bringing them into large-scale production. So the question then is, how are we actually going to achieve this? Well, we've raised now the additional £3 million following the results that we had at the Hillside project. The reason that we went ahead with this raise is we'd seen our share price gains over the preceding couple of months. We were very keen to protect that price and put in place a foundation from which the business could grow. We think that we are undervalued as a company, and we have a lot of ground still to go, but one of the difficulties of being successful in this game is it inevitably means that you need more money to be able to pursue your targets. Now that we've got what look like they could be the beginnings of commercial discoveries, we've got more work that we still need to do, but we took the opportunity to raise the additional funds so that we could accelerate our drill programs, primarily in Zimbabwe, where we're going to be bringing the drill rig back from our Nara project to our Hillside project, but also to ensure that we could pursue the Kalahari Copper Belt drilling without there being any need for delay. What we've done is we've now, with the extra funds in place, our original plan was we were going to use simply 1 rig. That would have been an 8-month program, which would have meant that results wouldn't have come out until Q1 next year. But thanks to the additional funds we've put in place, we're actually now going to be taking 2 rigs on, which means it will be a 4-month program, and we're expecting to have the full set of results this side of Christmas. So we've got a very exciting time lined up. We'll be making this presentation available online through our social media and on our website. There is quite a lot of detail to go through. And I think, Donald, you have some questions for me.
I do indeed, Ben. Thank you very much indeed. I think there's some overlap between what you've just told us and the questions that I'm just about to ask you. So we'll flex as we go through. But let me start with the obvious first question, Ben. Why did you feel it was necessary to raise that further $3 million in funding? You seemed, by junior miner standards, relatively well capitalised, and yet you came back quickly into the market and raised another just over $3 million. Why so?
So we had, just before we did the financing, we had a balance of about 1.6 million. So we were, reasonable cash position for a business of our size. It was really down to a choice of we wanted to move our plans forward much quicker, Donald. So one of the problems that junior exploration companies can face, particularly around financing, is you can inevitably end up having to make compromise decisions as you're trying to leave yourself as much runway as you possibly could. Over the last year, since Purebond really threw their weight behind us, we've gained significant momentum in the field, which has been reflected by the fantastic results the team has been putting out over the last couple of months. So we were acutely aware that with the success we'd had at Hillside, we really did want to bring that drill rig back up to the Hillside project immediately and continue the drilling there. So the additional finance has meant that we've been able to bring that plan forward. But in the KCB, and perhaps we hope more importantly, our original plan, as I mentioned, was to have just one rig in the field. That would have been an 8-month program with the month's delay that there would have been over the December Christmas holidays down in this part of the world. It would have meant we probably wouldn't have got our results until January or February, maybe next year. So we were very keen to see if we could bring a second rig into the field so that we'd have the full set of results this side of Christmas. So it's all about gaining or building on the momentum that we'd already gained. And so far, I think the market's received it well. I think we're one of the few placings I can think of at the moment where our share price has actually gone up above the placing price. So I think so far it's proving to be the right decision.
Without a doubt, that's an unusual thing. Normally the markets follow it depends on the valuation and the discount, and the market normally follows the discount down. So yes, you've done well. In terms of capital allocation, let me ask you, what are the competing needs and timeframes between Bulawayo, between Nara and Hillside and the Kalahari, and what will you actually spend your new £3 million funding? What does that get spent on?
So our operational focus has certainly switched much more to Zimbabwe. We're building a great team here in Bulawayo. We've got a main logistical, commercial, operational hub, and we have our field team and our field camp are really in excellent shape. So the focus of the business has been much more on Zimbabwe. We have some news coming up of some further investments that we're going to make and some other news as well, which I think will just sort of really underline our commitment to becoming a serious investor in Zimbabwe's nascent exploration space. We talked a lot about the first mover advantage that we have in this company and we're in this country, and we're very, very keen to do everything we can to seize that. In terms of capital allocation, I think we're probably looking roughly about a 60-40 split over the rest of this year. It's 60% in favour of Zimbabwe and about 40% in favour of Botswana. And the emphasis, of course, is because we have that second drill rig that we're going to be bringing into the field in Bots. So that sort of makes the ratio a little bit more even. But moving forward, we certainly see, depending on obviously what the results are, but our main operational focus is Zimbabwe. Of course, if we do strike copper in this drill campaign, which we are feeling very, very confident about, then of course at that point we will look at further drilling. So our plans in Botswana, we've still got a great team there. We've got the logistics hub that we've built and developed in Hansi, and our operational team and our operational focus, the guys that have been working with us now for a number of years, who are now being led by Dave Catterall. We're hoping obviously that they have the success that they deserve after all of their hard work, and will certainly continue to invest significantly in that project, subject to the results being positive.
Okay, Ben. Let me quickly talk to you about exploring and mining being such different businesses, requiring quite different business models. But I understand you've got lots of work in place, splitting Kavango into both an explorer and a miner. So why don't you tell investors about that?
So one of the key points of failure for any exploration company after they've made a discovery is making the transition into mining. We've seen recently a number of very high-profile failures on the market where companies have had what look like fantastic assets, but they haven't been able to bring them into production. They've typically failed either on not being able to raise sufficient finance or on not being able to become an effective mining company. In Zimbabwe, our strategy is to bring our projects into mining. So this open pit opportunity that we see here, there's no one else pursuing that at the moment. We've picked the greenstone belt that we really want to focus on, and we have this opportunity to build what we believe could be a 10 million ounce gold camp. That is a tier one asset, a genuine world-class opportunity. What we were very conscious of as a company is we didn't want to get to the point where we'd simply made the discoveries and drilled out the resources and had all the ounces without actually having any mining skills within our business. As you rightly said, the difference between a mining company and an exploration company is actually quite stark. They require very different teams, very different disciplines, very different processes. One of the great advantages of being in Zimbabwe is because there is this pedigree and tradition of smaller scale mining, it means that in parallel to our exploration team doing the great work that they're doing in the field, discovering what we hope will be these open pit deposits, we have an opportunity for developing Kavango Mining, which at the moment is producing on quite a small scale, a kilo a month. It's around about $65,000 a month. So it's not bad, but equally it's not anything that anyone's going to get rich on. But our plan here is to build up the revenue so it becomes a meaningful contributor to our Zimbabwe operations. But more importantly than that, what Kavango Mining gives us the chance to do is to put in place a strong foundation as a business so that once our exploration team has finished their work in the field and we've got what we believe are mineable deposits, we as a business should be able to make that transition from exploration into mining, we hope, quite seamlessly.
What kind of time frame would you be expecting that to take place over, Ben?
So the mining company is underway now. It started back in March, and we're looking to build that up to 3 kilos a month production by the end of this summer. Based on how long it will take to drill out the prospects that we have, we're very confident about Hillside based on the results we have so far, the fire assay results. We're very confident also about Nara. We've seen some really interesting looking rocks there, but we need to get the fire assays back. I think realistically, it will probably be the second half of 2025. I think it's at that point we'll be ready to start looking at some bulk mining. But one thing we are investigating on our prospect for the first set of results that we put out is we are considering a sort of small scale bulk mining opportunity. It's a bit of a contradiction in terms, but we think there might be an opportunity there possibly to open up a cut and start feeding ore from that prospect down to our main processing plant. But that's something we're currently investigating. So I think a realistic time frame is second half of next year. But if there's anything we can do to bring those plans forward and make this all happen much quicker, this is an incredibly entrepreneurial environment that we're moving in and it's living in, and it's possible to move very quickly. So if we can move quicker, we will.
Is it fair to say that you're simply looking to take any money-making opportunities and develop them?
Absolutely. One of the great weaknesses of the exploration space is that these companies are just enormous money pits, especially when you're listed as well, and all the overhead that you have with being a listed PLC. Not enough of these companies actually focus on building revenue and actually building profits as well. Those few companies that do focus on revenue, they like to talk about the revenue, but they don't like to talk about the profit because typically there isn't any. We want to become a profitable business in our own right as fast as we can.
But if you look at Caledonia Mining, that's a useful example of a very profitable gold mine in Zimbabwe.
They've done brilliantly. Yeah, absolutely. If you look at when they first took that project on, the Blanket Mine back in 2008, they've had really amazing success there. They've had 10 years of consecutive quarterly dividend payments, which reflects the strength of their business. Like all miners, it's been a bit of a hard time over the last 18 months, but they really have done fantastically well, and it does show what is possible. Their mine is an underground mine, so it's different in terms of the model that they've pursued. We're looking for these near surface open pit operations. But what Caledonia has shown the way on is that it is possible to do business in Zimbabwe, and they built a company that's worth around about 150, 160 million pounds. It's our ambition with Kavango. We want to build a much bigger business than that. We think we have that opportunity in front of us, and let's hope we're right.
Okay, next steps at Nara and Hillside, Ben. what's going to happen in the short term? Would you be thinking of you've got 6,000 ounces of resource in a tailings dump? Would you be thinking of actually monetizing that?
As soon as we exercise the Nara option, we'll immediately move into monetizing that. We're currently working with a local metallurgist who's doing the met testing on the sands, just to make sure that we get the plant design correct. We're looking at a CIL plant, a carbon in leach plant. We believe that would then be able to process ore from the surrounding area. The basic principle is that because the sands dump has ultimately come from the ore on that project, we believe that the CIL plant will be the right sort of design. We're looking at a plant capacity of around about 500 tonnes a day. So it will take about 4 months from commissioning the first civils. So that's laying down the concrete foundations and putting the civil engineering sort of in place, ready to put the plant on. It will take around about 4 months, we expect, to build the plant and bring it into production. It would then take just under 2 years. We're working on the basis of about 20 months at 500 tonnes a day to process those sands. But of course, if we're able to bring any higher grade ore into production, which we could crush and run through the plant, then obviously we would focus on that. So we would certainly immediately move into action on putting this plan into mining, on exercising the Nara option. But in terms of our plans from an exploration perspective, we are currently drilling our final hole at Nara, where we're testing the underground workings with quite a deep hole. We're drilling a 550 meter hole at the moment. That will be finished by the end of May. Our plan then is to take the drill rig straight back to Nara, where we've got what we think will be a dozen holes that we'd like to put into this hillside target. We currently have now what we believe is a 1,200 meter long by 600 meter wide target. We're not necessarily expecting that whole body will be mineralized in its own right. Of course, it would be fantastic if it is, but we think that might represent a couple of open pit opportunities for us. But we need to see what the drilling will tell us about the overall size and width of a potential ore body. So yeah, we're pushing ahead with drilling and hopefully defining what will become our first resource.
And those assays, they have to be sent out of Zimbabwe to be tested, is that right?
So the fire assays we're doing in Zimbabwe, we've put in place, it's not internationally accredited, but we've put in place quite extensive additional quality control. So the QA/QC that we're pursuing is much more rigorous than you'd have. We've basically doubled the standards that we've applied to this to help give us a degree of confidence. We're then sending the pulps from the fire assays out to the lab in Johannesburg for multi-element testing. So we're in the process now of shipping the first Nara samples to the lab in Zimbabwe to get the fire assay results. We're hoping to get those in about 2 or 3 weeks' time, those first sets of results. Then we'll be looking to apply to get an export permit to take those samples out of the country. In the meantime, we've just shipped our hillside samples out to Johannesburg, and we hope to have those results in about a month as well. So the process is a little bit cumbersome at the moment. I think that reflects that there hasn't been too much exploration activity in Zimbabwe. So there is a bit of the system sort of catching up with a company that's moving as quickly as Kavango is. But so far, we've had a very good welcome here. We're finding that all the various stakeholders and the ministries and everybody that we've engaged with, they're all sort of very open to trying to help us put in place the processes that will obviously work for us as a business, but will be able to work for other exploration companies as well.
Okay, my last question for you, Ben. Sadly, we're just about out of time. Let's turn to Dave Catterall and all those good things you were talking about in the Kalahari Copper Belt. You're just about to diamond drill 5,000 meters there. Talk us through in detail. You've got a minute and a half. What exactly is happening there?
Well, everything that Dave is seeing, and we'll have an update on targeting in the not too distant future, but all the feedback that I'm getting directly from Dave, I speak to him every couple of days, he's seeing the same patterns and he's interpreting the same results as we've seen further up the road at the Sandfire Resources discoveries. We've got what look like the same structures. We're in the right structural setting. We've got what look like the right traps. We've got the right physical indicators of sphalerite and galena. Those indicate a copper mineralizing system. We've even got some slight traces of copper from some of these drill holes that were drilled at quite a shallow depth by ENRG. So So we're feeling really confident about this ground. I mean, Dave is genuinely very excited about this. At some point, we'll be doing a public presentation from Dave where our shareholders and the market can hear from him directly about what it is that he's seeing. As soon as we've got those drill targets that are ready to go, we've got sort of the first batch as we put in the announcement today. So we are ready to start drilling immediately, but we're looking for the sort of the results of the work that Dave is currently completing just to put together the full final suite. It's looking very exciting. It's greenfield exploration, so it's pure blue sky for a company like ours. But we have 7,500 square kilometres in the Copper Belt. It's the last large land package that is available. And if we look at the recent transaction, this MMG, that set a benchmark for potential valuations. So we're not expecting, obviously, a $1.8 billion valuation because we'd need to do a hell of a lot of drilling to get to that point. But even if we were to achieve 10% of that with the ground that we have, with how prospective it looks, and if we're even able to hit some commercial-looking intersections, then this will be a transformational event for our company, as we said in today's announcement.
Ben Turney, CEO at Kavango Resources. That's it for tonight. Thank you so much for joining us. That was really interesting, and thank you for giving us so much detail.